Asheville, and Knoxville. Thank you guys so much for checking out our page and our video series here on our resources tab of lightspeedconstruction.com. This page is kind of designed for anybody who's ever had to deal with having a mortgage company listed as a payee on an insurance check, and it's a big, big pain. Really what we can tell you is that as a general rule, this can add between 1 and 2 additional months on any restoration project. My company Lightspeed focuses on roofs, and so for the purpose of our discussion, we'll primarily zero in on what might occur during a roofing project. So I guess let's get right to it, guys. On our page here, when your mortgage company is listed on your insurance check, the 10 steps to dealing with your mortgage company's lost draft department. We'll probably keep it at 10. You could actually mention a few more, but really I think you have to set the backdrop. Several different things are occurring with your insurance company and with your mortgage company at the same time. First thing that's going to occur with your insurance company is that you've gotten a loss and there's an adjuster that's come out to your property. Adjuster's going to come out there, and in many instances that adjuster can alert a homeowner or your contractor as to whether or not your mortgage company might actually be listed as a payee on the insurance check. So as that insurance adjuster's out, he might actually be able to give you guys a heads up whether this particular loss value, which is going to be your mortgage company's criteria, the amount of money that your insurance company is actually paying you for the loss to fix the damages, if that loss is actually above a certain amount. Usually here $10,000. So if you get $10,000 on $100, mortgage company would be actually listed on your check. If it's $9,995, they wouldn't. The big reason for this is that your mortgage company is a lien holder on your home, and thus they have a vested interest in seeing that that property gets restored back to its appropriate and original condition. What you really have to understand is that during the adjustment phase, you will typically end up with a supplement phase. So your insurance company has provided an estimate. Most of the time, a roofing contractor will come back and say, well, this isn't really going to be code compliant. We really need to take a look at these other items. Take a look. That process can oftentimes take 1 month. Supplement process is what you want to complete before you ever start construction. And for after the supplement's done, you can actually construct. Needless to say, that maybe can take 1 week between getting authorization to an approval from your insurance company to move forward with a final payment type schedule. Once that construction is actually performed, you'll be providing a certificate of completion to get a final payment. Now what you need to keep in mind is there's a first amount. Usually around half the money is released here. The supplement's agreed to, and you might increase that value, say by 40%. So now you've got the first half of the money plus 40% more that your supplement would have added. So you've actually got 1/2 plus 40% money that's left behind to collect. Where this process can get confusing, in my opinion, is that the mortgage company is going to want that initial paperwork. So they're going to want the amount that was originally agreed to. So that, let's just call it $10,000. What gets confusing is that most contractors are going to take a look at a supplemental type process, so that the amount has actually increased from $10,000 to $14,000 to bring your home up to code compliance, to add all components that were actually damaged, and to be paid fair wage on the property. You go from $10,000 to $14,000. That's a standard thing to see. So the problem is the insurance company is not aware that there's $4,000 additional dollars. This is where you start to take a look at the steps. One of the things you'll need to do is release your initial paperwork, your initial comments on your contractor, and your contractor's probably going to take it over from there. So I glanced at our notes here. That's actually going to be item number 4. Your contractor's going to need to be prepared to step in, provide a lien release, a preliminary lien release, his W-9 insurance contractor's license, and possibly some other things depending on the mortgage company and the lost draft packet that they require. So if you'll take a look at list item number 4 on our page here, it actually gives you some beta on what you need to expect your contractor to be able to provide. to get that first endorsement. So of this $10,000, what you probably actually have is half of your $10,000 to start off with. So you don't actually have 10,000 bucks. You've got $5,000 to get the job started. And what happens if your mortgage company is listed on this check? Someone will put an M out there because your mortgage company is actually on that $5,000. What you will have to do is satisfy several different criteria. You'll have to have your contractor selected. They will have to provide their information to your mortgage company as per discussion. Lien release, the W-9 insurance contractor's license, tax ID, those types of items. They're all listed on item number 4. And so when you have a $5,000 check with a mortgage company listed on it, you'll have to provide that information along with the endorsed check. So you actually have to sign the back of the check with those other items and mail it to your mortgage company. Of course, get the permission from your mortgage company to do so and find out exactly where to send that. It's very important. But that would be your expectation, that you will be mailing this check off. And they will either mail it back to you or deposit it directly to your checking account, depending on whether or not you bank with your mortgage company. Now, what I can say is that this process right here probably takes, again, close to a month. You've got to get several different items in. Your mail's got to go. It's got to come. And normally it lags behind at least 1 week between the time they say that they release it and the time that you're actually going to get it. In the meantime, you've got a supplemental value that you've been negotiating with your insurance company. So now you've got not $10,000, you've got $14,000 that you're going to be doing the work on. And that's the actual scope of money that you're going to be doing. So while you're waiting on your mortgage company to endorse that first initial check, what would have occurred is you most likely would have been dealing with your insurance company in a supplemental capacity, or having your contractor do so to try and get that amount corrected. That again is going to bring us from that $10,000 value to a $14,000 value to make you whole. So at this point, you've got a check in the mail, you've got a supplement negotiation, and you're waiting. There's 2 choices that we suggest considering. One is wait until you get a final check or a starter check to start work. You can also take a look at financing that first amount of money. Lightspeed Construction offers financing if that's more convenient. But you can take a look at getting your contractor a starter check through financing, or just waiting until that first $5,000 check comes back from the mail. Needless to say, once you get that $5,000 check, you're still owed approximately $9,000. So you get this $5,000 check, you've got $9,000 left over, and guess what? That's going to have your mortgage company listed as a payee as well. Stepping back through those same processes, you're going to get back in touch with your mortgage company, alert them that a supplement has occurred, this supplement that you've been working on for, maybe a month with your insurance company. And I say you, what I actually mean is you or your contractor. So what's going to occur with this $9,000? At this point, you've probably got your roof completed. You may have other items, say like gutters, gutter guards, even windows or siding to do behind. But really what that contractor is probably going to want to do is start scheduling those other jobs behind whilst turning in a statement of substantial completion to the mortgage company. Depending on your mortgage company, some of them ask for half of the work to be done, say for example a roof. Some of them ask for then after that maybe 90% to be done to release the next funds. But let's just say for our purposes that you call the roof half of the work. What they will actually do is they will most likely release to you another third of that money. So another $5,000 check would be coming. $5,000 more money getting deposited into your account or mailed to you as a check. With that, you're going to pay your contractor as well. At this point, that contractor's most likely done that next series of work, whether that be, again, gutters, gutter guards, windows, whatever. So you've got this to pay them. And usually what you will see them requiring is a conditional lien release at this point, because your contractor at this point is probably pulled within 90% of being done. He's gotten the next siding portion done or the next phase of construction done. So you will see 90% of completion being done once this is 90% okay. So once this next $5,000 is paid to your contractor, you've got a $4,000 outstanding balance. So with that $4,000 outstanding balance, you will actually most likely have to send a certificate of completion to your insurance company to get that final monies. So you, as the owner, will need to be prepared to sign a COC with your contractor and send that to your insurance company. At that point, your insurance company would mail you that final money, because keep in mind, they probably would owe you at this point either 1/2 or 1/2 plus some other portion. So you need to get that final monies from your insurance company. So what we suggest is go ahead and sign that COC, send that over to your insurance company, have that adjuster call you, because you've already agreed on the supplement, let you know that the money's in the mail. You'll alert your mortgage company that you're waiting on the final monies from your insurance company. Of course, you're going to want to let your mortgage company know that the value actually changed from the original $10,000 amount to $14,000, and that's what they can expect to be endorsing. So that final money has come to you, and again, it's got your mortgage company listed as a payee on it. That final $4,000, $5,000, $9,000 check is in your possession. What you will do, of course, is endorse that, mail that to your mortgage company once again. Mortgage company will endorse it and mail it back to you. So Knoxville and Asheville, what you guys are probably wondering after this nice, weary, long explanation is, what do we have here? So what you have is going to zero. You've got your insurance company paying you the first half of the money, plus a possible 40% increase, plus the final half. So guys, at the end of the day, your insurance company has paid you everything, and there's a balance of zero. Let's take a look over here, because your mortgage company might still be holding some funds. So you've had a series of possibly 2 or 3 different inspections with your mortgage company. You've had several different lien releases turned in, and your mortgage company's ready to pay you final balance. They will need a COC at the end as well. And after all this money has been dispersed to you and you have paid it to your contractor, it is going to leave a balance of zero as well, so that you have satisfied your mortgage company's conditions and you have satisfied your insurance company's conditions, and you paid your contractor, and you're an indemnified customer. So your mortgage company's on your insurance check. Good news for you guys, Lightspeed Construction is here to help. That's the subtitle of this webpage. Give us a call if we can. Knoxville, Asheville. Thank you guys so much for tuning in. Hope this helped y'all understand the mortgage and insurance process if your mortgage company happens to be listening.